What's going up, everybody? It's Zeb, and the crypto market is an absolute roller coaster right now. We've got bulls saying we're about to enter the next bull run, bears saying the party's over, and everyone in between scratching their heads. So today, we're diving deep into the current state of the market, analyzing the key factors at play, and figuring out what you need to be doing to come out ahead. We're going to break down the latest news, the biggest trends, and the most important indicators so you can make informed decisions with your crypto investments. Before we get started though, make sure to smash that like button, subscribe to the channel, and hit the notification bell so you don't miss out on any of my future videos. And don't forget to check out the Coin Sniper link in the description below. So, let's address the elephant in the room. Nobody knows for sure where we are in the market cycle. Some indicators point to us being in the final dip before the next alt season, while others suggest this could be the beginning of a long and painful bear market. And hey, some even argue that the bull market is already over and we're just seeing a dead cat bounce. It's enough to make anyone's head spin, right? But here's the thing. Trying to time the market perfectly is a fool's game. Instead of stressing about whether we're at the bottom or not, we need to focus on what we can control, our own strategies and risk management. Think of it like this. Even in a choppy market, there are always opportunities to be found. Right now, those opportunities lie in understanding the different potential scenarios and preparing for each one. If this is the final dip before alt season, you'll want to be positioned to capitalize on those explosive gains. But if we're headed for a bear market, you'll need a strategy to protect your capital and potentially even profit from the downturn. Remember those glorious days of 2021 when altcoins were pumping left and right and everyone was making money? Yeah, me too. But here's the thing. It's been a long time since we've seen a real sustained alt season. And that's starting to wear on a lot of retail investors. People are getting impatient, they're losing hope. And frankly, they're tired of seeing Bitcoin steal the show. This lack of alt season has had a real impact on market sentiment, and it's one of the reasons why we're seeing so much uncertainty right now. Meme coins, dog coins, you name it. People are throwing money at anything that promises a quick buck. This is a classic sign of a market starved for gains, and it's not a healthy sign. When speculation and hype take over, it creates a breeding ground for scams and rug pulls. Let's be real for a second. The crypto space has always had a problem with scams. But lately, it feels like the scammers have taken things to a whole new level. We're talking blatant rug pulls, fake celebrity endorsements, and phishing schemes that would make even a Nigerian prince blush. The problem is, these scams aren't just hurting individual investors, they're also damaging the reputation of the entire crypto industry. When people lose money to scams, it creates negative headlines, scares away potential investors, and makes it harder for legitimate projects to gain traction. So what can we do about it? Well, for starters, we need to be more vigilant than ever. Don't fall for get-rich-quick schemes, do your own research, and if something sounds too good to be true, it probably is. We also need to hold these scammers accountable. Remember when Donald Trump tweeted about Bitcoin? Yeah, me neither. It seems like ages ago that the former president was weighing in on crypto, and to be honest, it's kind of strange how quiet he's been on the subject lately. Back in the day, Trump wasn't exactly a crypto enthusiast. He even went so far as to call Bitcoin a scam and said he wasn't a fan. But despite his skepticism, Trump's presidency coincided with a period of significant growth for the crypto market. Fast forward to today, and the United States government is sitting on a sizable Bitcoin reserve, thanks in part to seizures related to illegal activities. This unexpected turn of events has made the United States a major player in the crypto world, whether they like it or not. Only time will tell what Trump's next move in the crypto world will be. Remember that time when Bybit, one of the biggest crypto exchanges in the world, got hacked? Yeah, not exactly a shining moment for the industry. Unfortunately, hacks and security breaches are an ongoing concern in the crypto space, and they can have a ripple effect throughout the entire market. When a major exchange like Bybit gets hacked, it erodes trust in the entire ecosystem. Investors get spooked, prices tumble, and it can take a long time for the market to recover. And it's not just about the financial losses. These hacks also damage the reputation of crypto and make it harder for the industry to gain mainstream adoption. The Bybit hack was a stark reminder that even the biggest players in the space aren't immune to security threats. It highlighted the importance of choosing reputable exchanges, using strong passwords, and enabling two-factor authentication. The good news is that the crypto industry is constantly evolving and learning from its mistakes. Let's face it, Bitcoin is the OG cryptocurrency. It's the one that started it all, and it still holds the most weight in the market. In fact, Bitcoin has evolved into a full-blown macro asset, influenced by global economic factors just like gold or stocks. This is a big deal because it means that Bitcoin is no longer just a niche investment for tech enthusiasts. It's become a legitimate asset class that's attracting attention from institutional investors, hedge funds, and even governments. But here's the thing. Bitcoin's dominance also presents a challenge for altcoins. With so much attention and capital flowing into Bitcoin, it can be tough for smaller projects to stand out and gain traction. Don't just jump on the latest hype train. Do your research, look for projects with strong fundamentals, and don't be afraid to diversify your portfolio. By understanding the dynamics of Bitcoin as a macro asset, you can make smarter decisions about your altcoin investments. One of the most interesting indicators to watch in the crypto market is the Stablecoin index. This index tracks the total market capitalization of all stablecoins, which are cryptocurrencies pegged to the value of fiat currencies like the US dollar. Why is this important? Because a rising stablecoin index suggests that new capital is entering the crypto market. When investors buy stablecoins, they're essentially parking their money on the sidelines, ready to deploy it into other cryptocurrencies when the time is right. Right now, the stablecoin index is showing some promising signs. When these stablecoins eventually flow into Bitcoin and altcoins, it could fuel the next leg up in the market. Now, let's talk about a more technical indicator that can provide valuable insights into the overall market direction: the Global Net Liquidity Index. This index measures the amount of liquidity available in the global financial system, taking into account factors like central bank policies and interest rates. Why does this matter for crypto? Because crypto is a risk-on asset class, meaning that it tends to perform well when investors are feeling bullish and have excess liquidity to deploy. For the past year or so, the Global Net Liquidity Index has been trending downwards, putting pressure on risk assets like crypto. However, we've recently seen a potential reversal in this trend, with the index ticking upwards in recent weeks. Increased global liquidity could provide the fuel needed for a market recovery, pushing Bitcoin and altcoins higher. Remember FTX, the crypto exchange that went bankrupt in spectacular fashion? Yeah, that was a wild ride. But amidst all the chaos, there's actually a silver lining: the FTX payouts. As part of the bankruptcy proceedings, FTX creditors are expected to receive a portion of their lost funds back. And we're not talking about small change here. The total payout could exceed $1 billion. Many of these creditors are crypto-native individuals and institutions. This influx of capital could provide a much-needed boost to the market. One of the best ways to get a read on the market is to see what the big players are doing. And right now, all signs point to accumulation. We're talking about whales like Saylor, World Liberty, and BlackRock, institutions with deep pockets and a long-term vision for crypto. These players aren't just buying a few Bitcoin here and there. They're making strategic moves, accumulating massive amounts of crypto at what they believe to be discounted prices. They're playing the long game, betting on the future of this asset class. Now, I'm not saying you should blindly follow everything these whales do, but it's worth paying attention to their moves and understanding their rationale. When whales like Saylor and BlackRock make big bets on crypto, it's a sign that they see value and potential in this space. So, where does this leave us? The crypto market is at a crossroads. We've got a lot of conflicting signals, a ton of uncertainty, and enough drama to make a Hollywood screenwriter jealous. But here's the thing. This is crypto. It's volatile, it's unpredictable, and it's not for the faint of heart. But it's also an incredible opportunity for those who are willing to do their research, manage their risk, and stay ahead of the curve. My advice? Don't get caught up in the hype or the fear. Focus on what you can control: your own knowledge, your own strategy, and your own risk tolerance. The question is, will you be ready? So that's the state of the crypto market right now. It's a wild, unpredictable ride, but it's also an incredible opportunity for those who are prepared. Remember, knowledge is power in this game. The more you learn about crypto, the better equipped you'll be to navigate the ups and downs and come out ahead. The crypto space is constantly evolving, and the more you know, the better prepared you'll be to capitalize on the opportunities that come your way. As always, thanks for watching, and I'll catch you in the next one.